Global financial markets are currently bracing for a potential turmoil as Jim Cramer, the Harvard-educated founder of The Street and host of CNBC's Mad Money, issued a stark warning about a possible market bloodbath reminiscent of Black Monday in 1987. And remember, he's not alone. All financial experts have spoken about the same. Are we yet again headed towards a Black Monday? Cramer's caution comes after U.S. markets suffer their worst trading session since the COVID-19 pandemic, with the Dow Jones Industrial Average plummeting 5.5%, the Nasdaq crashing 5.82%, and the S&P 500 nosediving 5.97%, wiping out over $5 trillion in market capitalization in just a single day. The sell-off was triggered by a combination of escalating U.S. China trade tensions, disappointing the July jobs data, and a sharp unwinding of yen carry trades that have fueled the speculative investments in tech stocks and cryptocurrencies. Now, emphasis is on the market's fate, and it hinges on President Donald Trump's next move in this ongoing trade war. Parallels to Black Monday, what is Black Monday? October 19, 1987, when the Dow Jones suffered its largest one-day percentage decline in history, are unsettling. Well, today, investors fear a similar systemic shock, particularly as Asian markets already show the signs of contagion. The panic quickly spreads to Asia, where Japan's Nikkei index plunged 12%, its steepest single-day drop since the 1987 crash itself. This deleveraging ripple effect hammered tech stocks and cryptocurrencies, with Bitcoin shedding over 10% in hours. Meanwhile, the CBOE volatility index, the VIX that is, Wall Street's fear gauge, has skyrocketed 170%, its biggest one-day spike on record. While current declines haven't yet matched the sheer velocity of the Black Monday, when the S&P 500 lost 20% in a day, the underlying risks are currently mounting. In fact, let's quickly take a look at the effect of the Trump tariffs and the trade wars on the global markets, as well as how it has been affecting exports at this given point.
U.S. customs agents on Saturday began collecting President Donald Trump's unilateral 10% tariff on imports from several countries. The initial baseline tariff took effect at U.S. seaports, airports, and customs warehouses at 12:01 a.m. Eastern Time, ushering in Trump's full rejection of the post-World War II system of mutually agreed tariff rates. Higher levies on duties from 57 larger trading partners are due to start in the coming days. Trump's tariff announcement days earlier shook global stock markets, wiping out $5 trillion in stock market value for S&P 500 companies by Friday's close, a record two-day decline. Prices for oil and commodities plunged, while investors fled to the safety of government bonds. Among the countries first hit with the 10% tariff are Australia, Britain, Colombia, Argentina, Egypt, and Saudi Arabia. This Wednesday, Trump's higher reciprocal tariff rates of 11% to 50% are due to take effect. European Union imports will be hit with a 20% tariff, while Chinese goods will be hit with a 34% tariff, bringing Trump's total new levies on China to 54%. Trump on social media Saturday told Americans, quote, "This is an economic revolution, and we will win. Hang tough. It won't be easy, but the end result will be historic." Some world leaders moved quickly to strike a deal with Trump to avert economic disruption, while others weighed countermeasures. Israeli Prime Minister Benjamin Netanyahu is expected to visit the White House on Monday, sources said, as unspecified goods from the country face a 17% tariff under the new policy. Japanese Prime Minister Shigeru Ishiba was reportedly seeking a telephone conversation with Trump. Tokyo faces a 24% levy. Trump is excluding goods that are subject to separate 25% national security tariffs, including steel and aluminum, cars, trucks, and auto parts.